Hello. Thanks, Scott. Andy.
Hello, Steve. Hello, Scott. Hi, everybody.
Hey, everybody. Thanks for tuning in for the trade of the week. Can't believe another Tuesday has gone by. They come and go. Hello, Waleed. Hello, everybody. All right. So, typical format. We have a few people still straggling in. Hello, David. And we take a few minutes to go through a few of these slides just to set the stage for the webinar. So as people continue to slide in, just a reminder, the disclaimer, the trade ideas, we are a software or content publishing company. We're going to talk about a few things today, but anything you see or hear in these webinars, including this one, should never, ever be construed as us giving investment advice. If you're looking for detailed financial advice for your family, tailored to you guys, you got to go to the RIAs, the Registered Investment Advisors, the ones who have taken all the fiduciary responsibility tests and are licensed to say the things that they are allowed to say. So, got that out of the way. Please don't construe anything you see as investment advice. And this allows us to talk about what we do on a weekly basis around here to help our community of traders. And primarily, the first one is Barry's room. Barry Anderson has a live trading room. About 500 people show up every day. There's a handful of really good leaders in there that are watching the market, commentating on things in real time. Barry, of course, as well. But he's sharing his desktop with trade ideas and showing people how he uses it in his daily repertoire. Good place to go and get immediate, quick answers if he's able to demonstrate it. But bell to bell, 5 days a week, Barry is there knocking it out. And the best part is, guys, this is a free room. There are a lot of rooms out there that charge 79, 99 bucks a month to make their overhead. We don't need to do that. We've got our own community and our own ecosystem here, and allows Barry to not have to charge for that room. So it's a great deal. I think some of the other rooms out there are probably a bit envious that we're able to do that. So aside from that, we've got the afternoon webinars, which you're tuning into right now. It's always 5 p.m. Eastern. Monday, I helped Jamie yesterday. Today, here we are together. And tomorrow, Dan and Brad will show you maybe a peek or two about what is coming around the corner in terms of new technology, new features, new tools, new releases. And then Thursday, Andy monitors the market all day long and comes up with some really nice some nice content that's applicable to the moment, for lack of a better way of saying it, and that's the Trading Studio on Thursdays. And then Friday, all four of us, including Sean and Jamie and Andy and I, we congregate in the Friday support session, and that is once a week, every Friday. And there's no format. You guys determine what we want to talk about. Somebody comes in and they're an eager beaver to learn how to maybe figure out a few scans or find out how to work around a few things they're having trouble with. That's the place to do it. So we are always there every Friday from 11 to 2 Eastern, sharing the desktop just like we're doing right now. And it's a great place to come and get information. The very bottom there says TI University. If I go to the next slide, it's a bit more understandable. We have Monday, Tuesday, Wednesday, and Thursday. We start off on Monday with beginner and finish on Thursday with advanced. And it's about an hour and a half worth of content every day during the market, 12 Eastern. And every day, like I said, is graduated into more advanced topics, but we cover a lot of stuff. And most importantly, the lawnmower man just showed up. Why does he do that to me, Andy? Why does he do that to me?
He's obviously on a set schedule. Yeah.
Give me a second while I close two windows here, guys, for my own sanity.
Totally, Wally.
All right, where were we?
Yeah, he knows you're trying to.
Obviously, this is his time in the neighborhood on Tuesdays. So I can do without the noise and the gas oil mixture that comes through, exhaust that comes through the windows. So Trade Ideas University is where I was, four graduated classes to really get you guys up to speed. And then anything you don't learn on Thursday, come by, like I said, on Friday for that support session. So we got you guys covered all week long with being available and helping you guys work out what it is you're looking to work out. And what the cool thing about Fridays is that we had a great example of this last Friday. Andy can attest. A guy came in and was looking for a scan, and we were kind of taking it one approach for the first hour, but the second hour when I took over, I tried something different. And the point being is you get 4 really good brains and pairs of eyeballs that have been using this product for a long time. And sometimes it takes a village to come up and construct the right scan for what the guy was looking for. So it's a very powerful 3 hours. You got a lot of brain power in there. Please stop by if you're looking for some additional support. And that is that. So now we get to the content. The basic theme of my weekly webinar is man and machine, human and machine. No man, no human is better than a machine. And no machine, however, is better than a human with a machine. So that's who we are. Trade Ideas is the machine. We would include Holly in there as well, but of course all of our custom scans and the technology that we use to bring the ideas to our forefront. Again, that's where this world is going, everybody, in terms of artificial intelligence, whether it's in healthcare or in this case finance. The machine is not going to take over and do everything for us. The machine is just going to aggregate and do 95% of the heavy lifting and the sweat equity and the manual labor to bring us a nice curated list of, again, whether it's oncology studies in healthcare or whether it's stock trading ideas. The AI can do a tremendous amount of heavy lifting. So, with all that said, we're going to talk a lot more about that, and Scott will probably cue you up at the end on how to watch our live stream webinar on October 20th. We'll be talking a lot about this stuff, but just a reminder with this slide here that it's, the human being is good, but a human with a machine is even better. And in the end, it comes down to the human looking through the curated and short list ideas to put into action. So that's the meaning of that slide. Well, the agenda for today, October 2nd, again, it is the trade of the week, but our trade of the week didn't trigger. We'll talk about how we found it and where it is now and what might happen to it. And we'll go through the market recap as usual. We'll go through the AI recap, a little bit of a slow start today. Same as yesterday, too. Very, very choppy, odd, weird market tape out there. And Andy and I will give you our observations. We have a few thoughts, but the AI was giving us her observations as well yesterday and today. Just kind of a slow grind, nothing really to put your finger on in terms of significant activities for the day. We're going to learn something new. I know a lot of the users, they go to Dan's webinar and they'll go to Jamie's webinar. If you missed, I think it was a week or week and a half ago, I think Brad did a quick demonstration on how to use the new custom channel feature. People always say, hey, can I create my own channel? And we used to have to say, no, I'm sorry, you can use the cloud code. But now we finally have a solution for people who want to create their own channel. And I've familiarized myself with it last night, and we're going to go through it together, and we're going to build a custom channel together. So if I stumble here and there, that's reality. We will review last week's price alerts that I sent out and gave people, and we've got, again, some topics to talk about, how those are performing, and it jives with a lot of the other stuff we're seeing right now in the market action. And then a couple of new price alerts to set for the week, but again, we'll get into it. The pickings are a little slim, and I think we'll get into why the pickings are a little slim. Let's go ahead and do that. I'll minimize that, and welcome to my desktop. I'm going to start off with the market recap. And again, I know a lot of you were also in Jamie's room yesterday, so what I have to say today is very similar to yesterday, and maybe with a little bit more punctuation on a couple of items. The S&P, perfect doji day today. Look at that. How about that? We pretty much opened and threw a few elbows and closed right where we opened up. So no real significant net change, no harm, no foul, just another day of data to look over here on the daily chart. But what we see in the S&P is still a trend that's intact, especially in the last couple of weeks. This red 20 period moving average has helped keep the price in check. And then we moved higher. I think what I don't have on here that I had yesterday was my pivot line. This orange line signifies resistance back here in late August. And then it was resistance again in mid-September, and then we pushed through it, and then we closed above it, which is good, but then we fell back into the range again for 5 or 6 days. Not so good here, but not bad. and popping back above that range. We're basically right on that number right now, right on that pivot line for the most part, with the appearance of what would be a higher low, but we're not going to really know until we get another day or two of data. The S&P is still in a nice uptrend. There was no real major technical damage that was done today. We're still trading above our 10-period moving average, which is very important to me. And it's also important to me to have the 10 above the 20 and the 20 above the 50, all fanned out accordingly. So, you know, the uptrend is still very much intact in the S&P 500. Take a look at the NASDAQ. And when we get to the NASDAQ, we saw an attempt to come up here and at least kiss or move through new all-time highs to create new all-time highs, but it didn't happen. So, you know, the question is a bit early and premature at the moment, but it starts to beg the question, is this going to turn into like a little double top action here? That's just thinking out loud. It's not something I'm calling. It's just something that starts to manifest and becomes part of the discussion. Yeah, make sure you get all those leaves there, buddy. So NASDAQ, you know, was providing a lot of leadership near recent weeks, but it stalled out predictably where the supply line of all-time highs were. Respectively over here again, the 10 is above the 20 is above the 50, and our price is closing above all three of them. Most importantly, that 10 period. And I'll go to the Dow. I heard rumors or rumblings today that the Dow actually made an all-time high and the index made an all-time high. The ETF got close, and you know, actually maybe it did. Let's just move that line right up there. We turtle headed above, turtle stuck his head out, and then turtle pulled his head back in. So kind of similar to what we saw on the NASDAQ in the last day or two. And then lastly, this is where it gets interesting, guys. I noticed this yesterday. And today is throwing up even more caution flags. The IWM, the Russell 2000, has not been participating like the NASDAQ and the S&P and the Dow. Nowhere near, a month away from its prior all-time highs. And ever since then, it's been selling off and quietly kind of out underperforming what the rest of the market's been doing. So if you're somebody out there who really likes to trade those under $5 stocks, you may have had, to the long side, you may have had some issues and some headwinds and some difficulty the last few days, because what this is showing us is that there's a little bit of trouble in a small cap city. Two giant red candles. I mean, now just like that, we're at the low end of our prior trading range. So when one of two things can happen, we could obviously bounce right here in this orange pivot line that's been there for a while, was resistance back here, could come back into play, and maybe we just bounce the IWM back into the range. But if we don't, and if we close lower, we're starting to put an assault down here on this 200-day moving average. Now, our other ETFs are nowhere near their 200-day. I mean, still way below there in the S&P, and it's still way below in the NASDAQ. But the Russell 2000 is starting to creep down close to it. And again, these last 2 weeks have looked nothing like the rest of the market. So there's a lot going on under the scenes, and there's a lot of breakdown, definitely in the small caps. I wanted to continue a little bit more with a few more thoughts before I let Andy have his thoughts. First off is, who's the real winner here? Well, it's pretty much Apple. Apple hit all-time highs again today. Apple sells a product, something tangible you can drop on your foot and pay for. But some of the other gold standards, part of the FANG technology, not doing so well. FANG, F for Facebook. This is not what an uptrend, a healthy stock should be looking like. Facebook does not sell widgets. They do not sell products, things you can drop on your foot. They sell data. In other words, we are the product of Facebook and Twitter and all that, Google. By using the product, they're selling us out on our data. And this seems to be kind of taking a little bit of a different turn these days. People don't necessarily like that as much, and the sentiment is definitely showing up in the stocks. Again, I tell the story, I had a conversation with my cousin the other day. He's from the Bay Area, and he's been getting into trading, and I've got 10,000 hours of looking at stocks, and he was just arguing with me vociferously of what the bull case is for Facebook to bounce back up, and Twitter. Twitter's going to be okay, he thinks. But when I look at the chart, I say there's nothing okay about this chart. I mean, you can come up with, conjure up ideas and scenarios as to why a company should get back on track, and therefore their stock should follow, or you can just follow the footprints in the sand and let the herd kind of tell you what the real story is. What the real story is in Facebook and Twitter here, people are trying to get out. They are trying to get out before it's too late. And they're doing it in a good market backdrop. You know, they're lucky that we're here at all-time highs here in the Dow and roughly in the NASDAQ, because somebody is trying to get out of those things. My other thought was keep an eye on Italy. We talked about this about a month and a half ago. Italy, the EWI ETF, is heading back down towards lows, and European contagion can always be a problem. If some of the European countries start having their credit default swaps being blown out of the water because they can't attract any investors, so they have to sweeten the pot for risk, that's where things start to get attention. And so that's an ETF for Italy. We've also talked about two major banks in Europe, Credit Suisse, absolutely horrible on the chart here. You know, you could get an analyst to come on CNBC and tell everybody 6 weeks from Sunday why they should be buying CS right here. But the footprints in the sand tell us we just made a new 52-week low today, quietly observed by not too many people. ING, another European bank, still in a nasty downtrend. So this is what the actual concerns were when our market had concerns about a month or two ago. And we don't really seem to have any concerns at the moment. Yeah, some of the housing starts and housing sales are starting to slump, and auto sales are starting to slump. But, you know, we do not want to see the European banks, especially Deutsche Bank, start screaming uncle and writhing in pain, because there are so many crazy derivatives wound up in these banks, especially Deutsche Bank. The bulls would like to see these European banks stay somewhat healthy. So keeping a solid eye on those. And that's all I really had. Andy, I think you had a thought or two.
Oh yeah, that was very thorough, Steve, and I agree with all your points, and we have to keep an eye on that. And you know, I will say this, even though I'm not one to fight the tape, and I've been mentioning it, there's not too much of a bearish case when you look at the SPYs and Qs. But it's still a market that lately, over the last several months, I've had a hard time getting excited about. You know, it's one of those markets, I think if you're a longer term investor, I don't know if the risk to the downside is worth to be positioned heavily to the upside. But that being said, I mean, the major averages are holding up, a lot of it due to, like you said, the big weighting in your Amazons and Apples and other ones. But you know, you look at, we're only about 5% in the spiders from basically coming back down into that funky range we were in all summer. So there hasn't been a whole lot of movement over the last month since we broke out of that, you know, that high over there, January. And really, yeah, with less than that, a 5% move would put us back into that lower band, one even below that, Steve, the pivot point. Yeah, you're probably only a 2% move from that January high. But anyway, to make my point, you know, bears don't have a case to make, but at the same time, bulls can't pound their chest, because I'm seeing a lot of things you are, where some major stocks are doing very well, and if you're in those major stocks, you're happy. But at the same time, a lot of the underlying stocks that make up a lot of these averages, although weighted much less, are really starting to fall out of bed, and we'll just have to see what happens. But once again, I'm not bearish, but not very excited to the upside either. But we'll see. We'll see what happens.
And we're going to continue on this little path when we start to go into the trade of the week and some of the trade alerts that were set last week. There's a little bit more we can sprinkle on this topic as we get there. So that's it for the market recap. I guess we can go to the Holly AI recap if you want to take it.
Yeah, I'll just take it away, and we'll go over Holly real quick, or maybe not so real quick. Let's just let me grab it here. All right, eyes on me. 1, 2, 3. All right.
Yep.
All right, guys. Let's just kind of peruse this together, and we're going to go through each Holly. One of the things I mentioned this morning, well, first of all, let me pull back up the spiders, and I always like to take a look at the tape we have to work with, you know, because Holly, kind of by default, she gets out of all her trades at the end of the day. And the reason we do that is just makes it easy for reporting versus holding trades in here for months, weeks, or whatever. You know, we get out at the end of the day. It makes it really clean for reporting. That doesn't mean you have to, and we always tell people you can find some really good multi-day holds in here. But I noticed this morning when we opened up, if you look here, this is Holly Neal right here. The first 3 trades were short. You know, the spiders opened up pretty even, break even there, flat, I should say. And we kind of bled down for the first hour, and I noticed the shorts were coming in. He had 3 there. In Holly 2.0, you had the first 3 out of 5 were short. And then in Holly Grail, the first 2 were also short in Holly Grail. This is sorted by entry time right now. And I remember, you know, talking to the fellows and saying, hey guys, man, I'm longing for the day when Holly loads up on the short side and just really gets paid. I mean, it's going to happen at some point. And I think that's where you guys are going to really appreciate Holly even a lot more than what you do now, because, you know, Holly doesn't have any prejudice when it comes to shorting or going long. Holly does not come in with any predeterminations of the market, okay? It's just a group of strategies. They have to make the cut, of course, and then if the setup evolves, you will get an alert, okay? There's no emotion in Holly. Holly doesn't see a big down move in the market and starts thinking, you know, oh, I'm gonna load up on the, you know, on the long side. No, that's not the way Holly works. So that day is coming. I don't know when it is. You can obviously just look at any spider's chart, and you can see it's been a tough, you know, game for all shorts lately, but or over the last 9 years. But the shorts they will have their day in the sun. It may not last long, usually, you know, but it will come, and I think that's where you're going to really appreciate Holly. So with that said, you know, some of the shorts worked today. As a matter of fact, some of the shorts worked really well. And let's take a look. Let's just start right here in the Holly Grail. And what I like to do is I'm going to put it on risk off because I like risk on is great. Okay, risk on over time has really blown away risk off. But at the same time, I think you got to pay attention to risk off. And this is a case in Holly Grail where had you stayed in risk off and got out on all of our exit reasons right here, most of them timed exit, reduce risk, and profit save, that's all of them, I guess, you're going to find out that, wow, you didn't do as well, only 21 cents to the upside, whereas if you were going risk on, in this case, $2.57, the most of it made on what? 2 shorts here, okay? Let's take a look at the first one, CSOD. Great little trade here. She faded, putting on the brakes. So in other words, the stock tried to move up. She took it. Now, you did get a little pain in this one. This is not a no pain trade. It's hard a lot of times when you're doing a contrarian trade. In other words, you're going against the grain to not experience some pain. In this case, well, we did a little bit, maybe 20 cents, but fell back down. And after that, quick move up and then back down. It was pretty, you know, pain-free from there on. Yes, a lot of chopping back and forth, and that's where Holly exited for a small, basically broke even. So this is where you as a human, you know, which you should do, say to yourself, I'm not going to scratch this trade. You know, I said in that little up move against me, I'm going to ride this out. And if you had, it would have paid off over time at 93 cents. Now, Funko. One even much better. Once again, putting on the break strategy. Yes, nice. Okay, pops to high. Holly shorts it. Very, very little up move against maybe 10 cents, you know, at the most. And look at this. Holly gets out for profit save again, just like she did in the first one. Where it didn't even do a bar reversal after, you know, this bar right here, it just bled. This is one of those trades where if you got out, you're going to be real mad at yourself at the end of the day when you look back and you see, oh, this is a good sign. Yeah. Buys all the way up, Steve, on Funko. Now look what's happening. Yep. Yeah, no emotions there. Holly's not thinking about all the love she had to the long side earlier. Now she's like, no, different game. I'm shorting it here.
A person doing that would be like, oh, but boy, I really love that company. I can't go short that thing. There's no emotion.
Exactly. Very right. I mean, that's a huge statement right there as the unbiased Holly. All these buys on the way up, and now look what you get. You don't get any here, and then you get a sell. That's Holly being the unemotional Holly that she is. All right, real quickly, I'll take it through a couple of the others. Not a lot of upside in Holly Grail there. Let's go to 2.0, and here you had risk on 142, risk off 53 cents. It stays sorted by the way I sorted it before I left Holly Grail. So you can see here, nice, outs on the upside. A few losers down here, but not as much as you had on the green side. This is the kind of stuff you want to see, guys. Those of you who are going to look into auto trade Holly in the future, you're going to want to see not only great risk on, okay, like this one, great, good risk on there. If you're playing 1,000 shares on risk on, you made $1,042 today. Which, by the way, let me tease you with this, guys. We showed this in the marketing meeting, and once again, remember, this comes with no ETA, okay? So don't come ask me next week, when's it coming? I do not know. But what's coming down the hopper is you're going to be able to put your trade size in. So not only will you don't have to stare at 1.42. You could say, I want to put 1,000 shares in. It's going to calculate it based upon the trade size you put in there. And you're going to be able to put the trade size in shares or monetary value. So you can say, I want every trade to be $5,000, and it's going to automatically calculate your risk on and risk off based upon the values you input.
Pretty cool.
Yeah, let me hear you. I like that. Yeah, Wally says nice.
Well, we all saw that for the first time today in our meeting, so yeah, we're excited about that too.
All right, but remember what we saw on the big performer over there on Holly Grail, a couple of shorts. We'll look on Holly 2.0, a couple of shorts. So love seeing that. Love seeing the short strategies work, because this is, like I said, is what is going to pay you guys when we do get into a bear market. And last but not least, it's Holly Grail. Let's see, Holly Neo. And the big winners here were actually a couple of longs. She did have a few shorts in there that were basically just flat, just didn't work. Those were the early morning ones. But nonetheless, not a whole lot to break down on like market direction today. Once again, all you have to do, it was a very tough day in the market for any strategy when you get this two lows, back to highs, almost to lows again, and pretty much close at almost a flat. That's just a tough day. So there's no directional bias today. I didn't notice any sector bias, but nonetheless, can't argue with the numbers, and those are very good numbers in a very tough tape.
Yeah, Peter's pointing out that the same symbol was traded on both sides, long and short. Every now and then we'll see that. That has happened. It's not the first time that's happened. It's two different strategies looking for two different things that just happen to cross like two ships in the night. It won't be the last time, but it's not very common.
No. Now, it is common for you to see a symbol traded twice on the same side with two different strategies. But yeah, this is, like Steve said, this is rare to see. I mean, we got tickled at that, saying Holly's flip-flopping. She first went long, and then the next trade, the short paid off. Wow, though, I remember, what was it, CRLB? Boy, did that short pay off. Right there it is. I mean, so she got long, she exited the long, and there it is right here. This is what Peter's referring to. This was a stop hit at 29 cents, but she hedged herself and actually made 55 cents on the upside on risk off. So, So anyway, yeah, that was yeah, you don't see that much, but it did happen today for sure. All right, Steve, I think that's it.
I'll take it back. And I just want to reiterate what Andy was saying. He said that for a reason today to us. He said, I can't wait until Holly leads everybody short. The reason we're so excited about that is because, guys, we've seen people come and go over the 20 years. And what usually blows out a trader is they get real comfortable with one method and one forehand on the tennis court. Just sit here and hit forehands, buy the dip. Hit the forehand, buy the dip. And where they get run out is they fail to recognize a complete change in the winds. And they sit there and they keep trying to hit forehands, buying the dip forehand, and they're getting blown out. And before they can really make an adjustment, their account has suffered and their mental ability has also suffered a tremendous blow. So we're very excited here when the day does in fact come that we can point to Holly and say, look guys, this is the tool that's going to help people adjust to new market environments. And we haven't seen that day yet because we've had the giant bull rally, the juggernaut that we have. But at some point, we all are real excited because we know how traders fall through pitfalls of going through the same motions and not retooling their methods. And we feel that having Holly as an unemotional scan right in front of us will help us, especially the newer traders, retool what's been ingrained in us that's been working for so long. Because eventually it's going to stop working. I don't know when, but it will eventually. All right, so back to my screen. I think where we are in the scheme of things here is we want to talk about the trade of the week. So the trade of the week, once again, was derived. Again, when you got a hot hand, you keep using it. And this composite rating scan has been probably the genesis of the last 5 or 6 trade of the weeks, including last week. And not only that, it was a second time around this year for ANGI, Home Advisor is the way you probably know them. It was the trade of the week back here, and then it was still in a nice uptrend. The composite rating score was still very nice on Friday before these 2 red candles, and also a pretty decent short float. So I got to honestly say, I am pleased that we did not get a trigger, because what we're seeing a lot of, and in the last couple of weeks too in other stocks, is a trigger and then a pullback and just a complete kind of a head fake, if you will, at new highs. And so I didn't want to have to discuss that scenario today. So the good scenario is remember I said in the past, there's 3 outcomes. The trade doesn't trigger, which is like what happened so far this week. The trade triggers and then pulls back and goes against us immediately. Those are the hard ones, or the ones that trigger and dig in and just keep going higher. Those are the easy ones. So we got a little bit of a respite of not having to make any decisions because we didn't get a trigger. And again, what Andy and I have been noticing, and I'll show you in the next segment here, things are not moving very far. They're not going much longer than a day or maybe a day and a half at the most. And I even saw Sean, you know, on StockTwits on Twitter earlier talking about, yeah, the hold times for his swing trading has gone way down too. So we're all experiencing the same thing. The hold times are not quite there, which means there's not a lot of follow through. So we did not get a trigger in ANGI, and you know, it's possible the market regathers strength and moves back higher. We still have 3 days this week for this thing to trigger, and even next week for those that want to. But it's there, and it was derived once again from the composite rating top list, and looking at the pattern, the sideways action, and some short float in there as well to try and make it go higher. But I think we got the blessings sometimes are things that don't happen, and I think that might be the case in this particular trade of the week. Be grateful for the things that didn't happen. So let's go, and as we've been doing the last few weeks, been handing out some, actually I don't know if I want to go there first. I don't want to go there first. I'm going to go to the new feature. All right, so there is the trade of the week, no trigger yet, ANGI, it still could trigger this week, we shall see. But for those that aren't aware, we have the new custom channel feature. And what I need you guys to highlight, and I'm honestly not sure what version it's on, but I can safely say, I think if we go to the, that exactly, David, actually Carrie sings that song every time she hears Andy, she calls him Angie. Sorry. The gearbox here, this is what you need to look for, and I'm not quite sure what the version is. I just downloaded the latest developers version, and it's not going to be available on the website, but whatever is the latest website version should have the channel bar that has this little gear here. And I'm going to click on that.
5.4, I believe.
Okay, and is that on the website?
Maybe not, no, 4.6, that's 0.46.
Okay.
Waleed or David, can somebody confirm that they have that gear?
Does anybody have this little gear? When I press that gear, look at that, we get a menu. David says yes. All right, so we hit that menu, and what we're looking for is edit channels. So again, this came, thank you, this came about by a lot of people asking, hey, can I have my own custom channel? And eventually we realized that this was something that people wanted, and so it became a priority in the developer and the releases. So having said that, if you download the latest version from the website and go to the channel, it's kind of hard to see it, but maybe it's because of my Windows 7, a little faint gearbox there. Click, left click, and edit channel. So now what we're going to do is we're going to set up a channel. We're going to need, let me do this ahead of time. I'm going to get a step ahead of myself. I'm going to go to pre-market, and I'm just going to use this pre-market as an example, and maybe I might even come in and load something from my cloud. Maybe I want to load the Extreme Volume High-Low Pro and make this part of it, and maybe also a compare count window for whatever reason. Where are you, compare counts? There you go. And we just launch that, and it is what it is. Because what we're trying to first do is identify what we want our layout to be, because these cloud channels, we're going to create our own custom cloud channel with our own visuals, and what we have to have, the meat that goes inside there, we're going to use the save layout cloud feature. So I'm on a channel. I just pulled down 2 additional windows to add to this mix, and now I'm going to basically turn it into a cloud layout link. File, save to cloud. We're going to use this button right here, entire layout. And I'll just give this one a name. I'll just call this early morning layout. Save. This particular array of windows has now been saved. I no longer need to come to this channel. Can a personal layout be saved over multiple monitors? I don't see why not. I could have as many windows screening over to my second screen as I want, and as long as I lock it in by file, save to cloud, and entire layout, I would grab all those windows, so it should work. So now let's go back and work on creating a channel bar. We go back to load layout. Now that I've got my cloud code ready to go, I'm actually going to copy that because I think I'm going to need that handy. So I'm going to go file, let's see, load from cloud, early morning layout. How do I copy that?
Share.
Share, thank you, handy. Jeez, brain fart. Copy. Okay, now it's in my clipboard. So I can go over and work on the channel bar gear, edit channel. Pretty self-explanatory from here, add channel. I'm just going to go ahead and dump in the URL, the cloud link, since I've got it in my clipboard, paste. And as you can see, we can use default images, but that's never fun. We always want to use our own images, so I grabbed a few. But what I want to show you, what's interesting in this image is, let's grab this one to start with, the lotus flower. Now notice I can pull this frame around. This frame is the exact same frame size as the channel bars over here. So if you're going to select a custom image, I would highly select trying to find the smallest image you can, 150 by 150 maybe. And then even then, you're still going to have to use this this cropping image to come in here, and I'm going to highlight and center that over the little flower there, and I'm going to click crop image. And that is going to become my new channel. So I haven't done this yet. Let's all hold our breath and cross our fingers and see what happens when I click OK. We need a name though. Early AM layout, and this is just completely customized. That's the reason we're showing it. So early AM layout's going to have that lotus flower cropped. It's going to have this cloud code, which was the channel that I built, plus adding a couple more. Let's see what happens. All right, there is, looks like one channel. Let's go ahead and let's do another channel just for the sake of it, and I'll use the same layout just for the, actually, yeah, no, I'm going to use this layout. Can we go up here during that? No, we have to close that. What if I click apply? And ta-da, there it is.
Mm-hmm.
Early AM, looks like we don't have enough space for a lot of words. My layout got cut off, and I can't open it up that way, so there's something to consider. Let's do one more. So we'll go edit channel. I'm going to go in and grab the layout here first. I'm going to save this current layout, entire layout, main layout is the title. I guess I'm saving and sharing when I do that. Copy all. Okay. Back to the gearbox. Let's do edit channel. Let's do a new channel. Add a new channel. All right, we'll drop my cloud code in there. And let's look for an image. Again, a lot of these layouts.
Mighty Mouse. We all want Mighty Mouse.
What about Mighty Mouse? Yeah, let's get Mighty Mouse's head in there. And we have just enough room to grab his profile. Maybe cut off a little bit of his ear. You can't modify this. This is the size of the channel, so you got to work within that. So that's why I was recommending when you go on, try and find the smallest point, images that you can. So we'll click crop image, close enough, and we'll give this one, let's assume that this layout was only stocks that are under $10. So we'll just call this the Mighty Mouse. And we even have a strategy, of course, called Mighty Mouse from Holly. What's that? Did I forget the Y? Thank you.
It's funny, I did the same thing when I was talking to Waleed over there. I forget the Y out of mine too.
So we got the title, we got the cropped image, and we got the cloud code. Let's click OK. It looks like it's banking that in the library, and let's click apply. Now, I'm pretty impressed that we did this without any hangups. I mean, I didn't take it to the full extent, and I'm sure we could go in there and check it, but let's just see. Mighty Mouse. Yep, that's the layout I copied for Mighty Mouse. And then for early layout, should be the pre-market plus the other two that I grabbed. Oh, a big golf clap for the developers.
Hey.
So what if we wanted to, I'm gonna go back to my main layout because Mighty Mouse is where I wanna be. That's my main layout. What if we wanna get rid of one? I would assume we would just come in here and edit channels. Looks like we can highlight that and then delete that channel. Probably pretty simple as that. Now, correct me if I'm wrong, Andy, there's a total of 3 that we can do, right? Is it limited to 3 or is there more?
3 or 4, I'm not sure. I think it's one of the two.
Okay.
3 or 4.
Oh yeah, thanks, Wall. Who said that? No friend.
5. Okay.
Okay, shit. Look at David, he knows more than I do. I work here. Second mouse gets the cheese. I say that a lot. That's a good, good analogy. Thank you. So that is the new channel bar. You guys ask and you ask and you ask and you bug and you bug, and eventually we get it that this is something you really want. And by the way, the next big thing that's going to be coming that you guys really want is the ability to have all 3 segments of Holly at the same time, not having to just monitor one. That's coming very soon as well. So my point is, when you guys say, well, this is what we want, this is what we want, we listen. And there we are. Anything you want to add before I move on?
No, you covered it very well.
All right, on the fly in front of everybody. So let's finish up by discussing the market that we're in and looking at last week's price alerts that were given out. A little bit of a story here if we go through each one. I mean, they had 1, 2, 3, 4, 5 triggered WPM. My notes, may be good for a day bounce. Well, gapped up and didn't really give anybody a chance to give it a day bounce. So that one's just been kind of wishy-washy, no follow through there. Roku, I like this one, 21% short, nice consolidation. Gave us 1 day yesterday. That was it. It triggered, actually it triggered the day before, so it gave us a day and a half. Something about that time frame. And then today it rolled back into the range. Not what we want to see. But this is the kind of stuff we're seeing left and right, which in the bigger picture is showing up in the apathy of the uptrend that we're currently in. Another day and a half, HIIQ. This was my favorite one. I remember getting excited about this one. Only a 7 million float and 48% were short. But we could only manage to get, and here's our intraday, boom, right here 1 day, and then maybe a slight high the next day, and then it's crapped ever since. So another one that did not follow through for very long. In the swing trading time frame, day and a half. Burlington. I remember this one specifically. We had the nice bounce, the bottoming tail, and I said in the notes, maybe a good 1 day or a 1.5 day hold. Hit it and bail. Hit it and quit. And that was it. There's our arrow, nice big green day, and then maybe a dime higher the following day, and then it retreated. It's much lower. So another example of stuff only going a day and a half, whether it was a dead cat bounce trade or whether it was HIIQ, at all-time highs. This stuff's not following through. And this is the worst of them all. Tickled our alert and then just proceeded to sell off. So this is not really what we've been looking at the last few weeks, guys. We've had a lot of good stuff on here the last few weeks. And so this is just another reason that Andy and I are starting to get a little grumbly about what's going on with this market. Are we in double top territory on the NASDAQ Qs that we looked at and the Dow? This stuff's not following through. So all that being said, I'm had a little trepidation about coming in and trying to just mark up the same stuff again. So I don't have as many this week, and I'm even going to throw in a broad-based short for you. And he didn't know that. He wasn't aware of that. Okay, so we have a clean slate of price alerts. I did not find anything in the Hollies that I liked. There was a lot of short sell Hollies as well, and I'm just going to mark up some long stuff except for the one tease that I did mention. So off of the composite rating, once again, I found 3 that are kind of interesting. Andy brought one to my attention, which I will bring up, and then I have a short sell that I just pulled out of thin air. So the first one is going to be GBX, I believe. Yep, GBX. It's at the top of my list to start with. Again, not looking to chase stuff, but this looks very similar to some of the stuff we just watched, break out and fail. So we really have to be cautious. I'm going to go back to the main high back here, which could be a 52-week high, and it's called 60 and 91. So right click, 60 and 91. What we have is a 33% short float with consolidation at highs. And again, I mean, I'm not throwing a 5-star rating out on this one. It is what it is. This is the kind of stuff that was working, but last week it's not been working as well. But it's too soon to just change methodology altogether. We just have to know in the back of our mind that maybe we don't take as much size on these. Maybe we give them a little bit more benefit of the doubt that they might turn against us. The next one is also from that list, and it's going to be ERI right there. ERI, kind of a nice defined cup and handle, perhaps, sharp cup. But again, I'm going to wait for all-time highs, which is the high of this red candle. That's 50 even. So we're going to go to 50 and 1 cent. Oh, geez, 50.01. All right. Nice cup and handle, and 22% short. Again, if the markets are cratering and they're down and they're red on the day, and these things start triggering, guys, I wouldn't give them much thought. I would only be interested in these when the market is working in your direction if you're going long. The third and final one from this particular scan is oldie but goodie, WWE, and this one's a little different. This is why I say don't chase the 7th green candle or the 6th green candle, guys, because the elevator down is a hell of a lot stronger than the stairs up. But now, this has been basically a reset. A nice sell-off yesterday and a nice bottoming tail today. On the intraday here, this is what that looks like. A nice bottoming tail down egregiously and then right back up quickly. Those always translate into these types of candles on the daily chart. And in my experience, those types of candles on the daily chart can be, considered possible for a bounce. Much like that was the one that triggered last week. I already forgot the name of the symbol because I've erased it. But on this one, all we're going to do is take today's high, and if we get a bar reversal after a really nice 2-day sell-off and a big bounce, maybe this thing wants to continue higher because WWE still has a 21% short the float. So 93.67 is our number. 93.67. Bottoming tail is worth noting. Uptrend intact with 21% short the float. So that'll be the third and final from this list. As you can see, here's another example of what Andy and I have been trying to hint at. The winds are feeling a little changey out there. Normally, you guys recall, this thing is stacked. This top list is stacked down to the bottom of good ideas. We're running out of good ideas because the composite score is slowly knocking things off this scan and doing the hard work and the hard lifting for us. So we're just left with a smaller list of stocks that are, in fact, holding up.
That's a very good point, Steve. It really is.
Yeah.
The major averages are pretty close up there, but look at all the stuff that was highly, and same thing on my composite rating. I don't have short float, but very good point.
So doing that composite rating and getting that in your guys' hands has really saved a lot of work. I mean, you don't have to go in, okay, make sure it's above this and the fundamentals are this and make sure the volume is no, we've done all that for you. So it's an easier way to get to a starting point. And the starting point today is nothing like the starting point we had the last few weeks. So again, another kind of a caution flag as to, are the winds changing out there? We'll see. The one that Andy brought up was not on any of these scans. It was just in the back of his mind. At one time, it was a strong stock with a high composite rating. And how the mighty has fallen quickly. Echo now has a composite rating down in the 63s, where it was very strong up here. But technically, we're running right into a major congestion area. And if you'll notice, The 200-day moving average came into play today perfectly. This is a perfect test of a moving average on a daily chart. Push through to the downside, not very much follow through, and a quick push back up, and most importantly, the close. The candle body, the close is above that moving average line. This was a successful test and hold of the 200-day moving average after a 2-week fall from grace. Looking left, a lot of congestion back here, also a good reason for buyers to step in. We're going to just mark this up as a possible, again, maybe a day and a half dead cat bounce. We'll see. But the high of this candle is 30.37, so we'll go 38. 30.38, and once again, maybe good for a 1 to 1.5 day bounce. Hit it and quit, because I don't trust this market right now. Quit. And that'll be the last of the longs. So if, big capital if, we do get some winds of change, right now Andy and I are just noticing and looking cautiously at possible winds of change. But if we do get winds of change, something comes out, there's some catalyst, and the volume creeps into the downside, and all of a sudden we get a big down push. I'm going to direct your eyes to this spiders chart. If we invert this chart, it's going to look like this. SDSs. And if the market gets weak, it's going to take a lot of stuff down with it quickly. They're not going to be, asking questions and sorting them out. So sometimes some of the best plays to the short side are just jump into an ETF. And SDSs would be that ETF. If the market does sell off at all this week, the remainder of this week, maybe we get some bad news. If we get a break, pretty much, and I'll go back to the spiders, looking at the support level here that I was talking a lot about, if we break that support, it's going to look like breaking out of this congestion down here in the SDSs. So we're just going to throw this in kind of like a sorbet. Like I've said before, if things do change, at least there's something on here that might be able to generate some ideas and some alpha. 33.35, we'll go 33.36, and perfectly nailed it. And let this be a short selling general idea based on the bigger index. And if you don't want to look around for something to go short, all you got to do is buy SDSs, and if the market is in fact going to sell off, we're going to get a pretty big push off of those lows. And a one day sell off in the S&P, you could easily see a push in the SDSs up to that orange line in a single day. They'll move quickly, especially the SDS being a double, meaning if the S&P is down 2% that day, the SDSs are going to be up 4% that day. So they're an inverse and they're a double. And sometimes when the market breaks and you don't know what to do, the easiest thing to do is to just go to the well, get in some SDSs. It can either hedge longs that you have that you don't want to sell, or it can hopefully create some value for you if the market breaks. And so therefore it's a set it and forget it scenario. We're going to set it and forget it. We're not wishing the market to go down. We're not coming up with reasons for the market to go down. But if the market does go down, we have an idea that'll pop up directly for you. So let me copy these 5 and drop them in the chat window. And that's pretty much all I've got for today. Unless Andy wants to add something.
No, that's it.
Chat window. Okay, price, I'll call it 5 price alerts. And control paste. That will paste those alerts into your own price alerts, guys. And you're welcome, Waleed, and whoever else wants them. They're in the chat window, ready to go. So I'm going to be watching the price action for the next few days. Again, we talked a lot about some things that didn't quite add up this week. Short stays in the swing trades, day to a day and a half. A lot less to choose from on our favorite swing trading top list. And just things feel a little different. And that's coming from 2 guys who've been watching this stuff for a while. So we'll see what happens. All right, I'm all talked out. Come on in, Scott, and tell them what's up next.
Hey, thanks, Steve. Thanks, Andy. Yeah, on the way out, a couple items. We have a podcast every week, so make sure you subscribe to that. Just search for Trade Ideas Podcast in whatever application you use for your podcasts and add us as a subscription. That way you get the newest podcast as soon as it comes out. You can also cruise through the old episodes and find some gems. We've had some guests on, so check that out. There's an ebook that's available. trade-ideas.com/ebook is the URL to go to put in your email address to get the download link. And Andy and Steve both contributed chapters to it. It's got 5 strategies on how to survive a post-BTFD market. It's a great thing to have in your toolbox. We've got a live stream available for our upcoming October 20th event. A bunch of good speakers. Learn more on the details at trade-ideas.com/livestream. You can just put in your email address there and you will receive updates leading up to the event with the link to watch it on the day of, and then you'll also get immediate access to the recordings as soon as they're made available. So you're first on that list too. We've got a discount code for you. Use fall savings, all caps, just like you see it. That's the new one for this month. Saves you 15% off your first month or first year, depending on which subscription you're picking up. And you can also use this to upgrade from standard to premium. Just use the same code. If you have any questions about that, email us, info@trade-ideas.com. You can follow Steve Gomez on Twitter at TodayTrader. Got Trade Ideas. We've also got at QuantBot, some other handles. Facebook.com/TradeIdeas. Pro is the place to like on Facebook, so you can get updates there and share that stuff with your friends. Thanks, Steve. Thanks, Andy.
All right. See you guys next time.
Yeah.
Thanks, guys. Thanks, everybody. I'll see you Thursday.
Later on, y'all. Bye.